Hi everybody, Nats Myers back, and in this video I'm going to talk about how the interest rates are going down and how to take advantage of it. This is mostly for the Canadians, but it also applies in America. So right now as I speak, the interest rates are going way down, and with the interest rates going down, it's time to start acquiring real estate and acquiring businesses. So what you want to make sure that you do, make sure that you get a deal under contract as soon as possible. So those who don't know, getting a deal under contract just means make sure that you find a piece of property or you find a business that you're looking to raise money for, that you want to raise money to acquire, by sending them a letter saying, we want to make an offer to acquire your business. And ideally, don't reach out to any brokers, reach out to the property directly, because you're going to avoid all the silly fees that people are going to charge on top of the acquisition price. So make sure you do this now. And the reason why you should do this now is because you'll have more funding opportunities. Because when you raise money, there are two parts of the money that you need to raise. For those who don't know, there is the equity and there's the debt. For the, because usually if people buy a house, they're looking to buy a piece of property with their own money plus a mortgage if they can't afford the hundreds of thousands of dollars or millions of dollars it costs. But when it comes to acquiring larger pieces of real estate for an investment property or for a business, you have to raise a lot more money to be able to take that money to acquire a business. So like, let's say there's a business that costs $10 million, like an expensive shopping center or shopping mall. You want to buy it. In order to buy it, you have to make sure that you can afford the down payments needed after the lenders come in. So a lender won't lend you more than, let's say, 85% loan to value ratio if you're lucky. Then you have to raise the last 15%. So you would have to raise the last $1.5 million yourself. And if you have only, let's say, $500,000 in the bank, it will be really hard for you to, how else are you going to raise the money besides partnering with other investors and partner with you in a down payment? So this is the specific type of funding that has the most amount of regulation and scrutiny, because everybody wants to do it. So to do this, you just have to work with a team to draft up the legal paperwork, get the financial analyses in place, and then do a sales, I guess an aggressive or semi-aggressive, depending on how you feel about it, process to reach out to the investor so you can close the deal. That's pretty much it. But make sure you do it as soon as possible, because the interest rates are lower. You're going to get higher profit margins on the rent rolls, on the terms that the lenders will use to lend you the money. So the profit that you can make on the business will be higher, or on the real estate will be higher. So this means that you just make more money and you'll have a less risky transaction, especially if you're able to work with a lender that's able to lend you the money without changing the interest rates halfway through the term. So if you lock in a long contract with a lender early on and the rates don't change, then you've saved yourself years and tons of hundreds of thousands of dollars or millions of dollars just by timing it right. So that's why start now, and the rates are going to continue to go down. Markets are going to go up, hopefully, and or at least with respect to the interest rates going down. And this has been really important because there are a lot of sellers that couldn't actually acquire assets, whether it's real estate or businesses, because they were worried about. People were mainly worried about not having access to funders and not having access to deals. Because what will happen is a person will have a company that they own, or either a company or a piece of real estate that they own, and then they won't want to sell. They won't want to allow somebody to make an offer to their company, because they'll evaluate their company really high, and they'll use the old valuation metrics of when the interest rate was zero. So some people call this the ZERP era, the 0% interest rate era, and many people only kept their deals with them at this higher price, so it was harder for people to bid because nobody can underwrite the deal with the new interest rates and say that it made sense. Because sellers were valuing deals, their own deals, by deals during the ZIRP era, during the 0% interest rate era. And people that wanted to buy businesses, the buyers, potential buyers, were evaluating deals based on the current interest rates when they got higher. And so the numbers weren't panning out. So what will happen is it slowed down capital markets in the certain private markets, and it really made it really hard for people to acquire businesses. So I guess the end game and the solution is getting pressure on the government there to finally start lowering rates. And obviously the reason to lower rates was obviously to clearly it was to lower the rates of inflation. But another byproduct and another benefit is we also get to move more quickly when it comes to closing more deals, being able to get more profitable deals, being able to get funding that's not going to destroy the profitability of a business or a piece of real estate that you acquire, so you can actually own the assets with less risk. So now is the time to do it, and the reason why to do it now is because it takes a bit of a while before you can get an investor interested. So if this is something that you'd like to do and you'd like to raise money to close a business or real estate acquisition, make sure that you get it done. Head to raise.com if you want our help, but with or without us, make sure you get it done, and we'll see you in the next video.